Hey there, people. Welcome to episode number 25 of the Under the Radar Real Estate Podcast. As always, I'm your host, Josh, and it is May of 2025. And we are going to be reviewing, as we always do in this podcast, the market watch from, and the market stats from April of 2025 to get an understanding of where the market's at right now and where we're likely headed. And I'm not going to beat around the bush. You've probably already seen a lot of the news articles. You've watched some of the news, you've seen the headlines, we've got a lot of inventory and we don't have a lot of sales, which means we are in, yes, a buyer's market. Firmly in a buyer's market. If you watch this podcast, I kept saying the trending numbers when we looked at months of inventory and sales to new listings ratio were pointing towards a buyer's market. Now we are firmly in that buyer's market. So what does that mean? If we look at the generations who are now entering buying territory, whether it means Gen Z or millennials, this was the opportunity that you've been waiting for, and it's now here. We are entering into a buyer's market for really the first time in a long time. We've seen little pieces and hits here and there when it came to the pandemic, but here we are. So let's start reviewing the numbers right away. Let's get right into it. Let's open up the market watch. You should be able to see it right here on the screen. Okay, so this is the market watch from April 2025. This is what the news uses. This is what most realtors use to digest the stats. So let's zoom in on what's happening. So let's look at it. So the first thing we'll talk about is that, the market has clearly flipped. We've gone from either seller's or balanced market now to a buyer's market. There's a lot of opportunities within this buyer's market, and we're going to get into that later in the podcast. So first, let's just look at some of these key stats. So, okay. Move it out of the way. Okay, so first things first, sales. That's a big number. Sales down 23.3% year over year. And why is that? Sales can be down in many years. We've seen it in the pandemic when things change, things dry up, sales can go down. The concerning number is right below it. We have new listings and active listings both up. New listings up 8%. So we've added 8% more listings than we did last year during the same time period. But active listings are up 54%. That means listings that have just been sitting without selling, those are up by over 50%. So there's a lot of inventory that's just sitting on the market and not selling. Now, if you watch this channel, you know I just did a video on the amount of condos sitting on the market, and that 54%, a lot of it is condo product. A lot of the inventory that's just sitting and not selling, unfortunately, are condos. Now, the most, concerning number overall, and what's really concerning number for sellers, not for buyers, is this: the average price down 4.1% year over year. Now, if you were to track month over month stats, and we'll get to that in a little bit, those numbers are actually trending upwards a little bit. But again, we look at things year over year. We look at April last year versus April this year. It was a different sentiment, right? April of last year, things felt like they were going to be getting a little better. That's April of 2024. We were coming out of dark economic times in 2023 with high rates, and rates had just started to kind of come down a little bit into 2024, and people felt better, so sales were up, and pricing then started going up. We're in a different zone right now with tariffs and Trump and all that stuff going on. It's clearly affected our market. And not only that, in April, we had an election that just happened, right? So a lot of distractions in April, a lot of cause for concern and cause for pause in the market. So because we are a Toronto-based podcast, now let's look at the Toronto-specific numbers to really get an idea of what things look like in Toronto. So as you can see here on the screen, the numbers paint a similar picture to the overall GTA numbers, right? So when we look at prices, though, prices are still, I mean, while we talk about a buyer's market and all this kind of things, if we were to talk affordability, when we look at the prices in the 416, I mean, affordability is a factor really of what people can afford to pay on a monthly basis based on their incomes, right? So when we look at detached house prices at 1.7 million or even semi-detached at almost 1.3 million, it's really not affordability for most people out there, especially when we talk about Gen Z and millennials. Townhouses now start dropping into that affordable zone, especially if you're double income or if you're earning over a couple $100,000 a year. But then condos are really where the affordable piece of the market is at $700,000 as an average. What can you get for $700,000 in Toronto? Most of you probably know it's probably a 1-bedroom, maybe a 1+ den in most neighborhoods. And we're going to retouch this affordability theme as we go on through the podcast, because as we move forward, you'll get to understand why I talk about under the radar neighborhoods so much on this podcast. And we're going to talk about those in just a moment. So I wanted to touch on all these general numbers right away, just to kind of give everyone a base and an overview of what we're going to be talking about as we go further into the podcast, because there's an opportunity for buyers right now, and it might not necessarily be in all the trendy neighborhoods that you necessarily want to be in, because there's a little bit of price inelasticity in those neighborhoods. But there's some opportunities in a lot of under the radar neighborhoods, which we're going to get to in just one moment. But before we get there, let's first look at some of the under the radar stats to kind of give us an idea of some of the trending statistics and what to expect as we move forward in this spring market. So we are going to go over to the City of Toronto stats specifically. You can see them right here on the screen. And we are going to talk about the sales to new listings ratio and the months of inventory, because those are the two indicators that tell us where the market's at. So first of all, as an average in the City of Toronto, let me just move that last one so we can actually see it properly. There we go. So you can see them circled right here. So City of Toronto, 4.4 months of inventory in the City of Toronto. That's high, right? Generally about 2.5, maybe 3 months of inventory is a balanced market. We are well past balanced market into 4.4 months of inventory. That means if there was not another listing to hit the market, it would take just about 4.5 months to sell off all the inventory. Sales to new listings ratio trend is the amount of new listings that sell within that given period of time. So in April, only about 35% of the listings that were hitting the market were selling, right? Which means 65% of them are active listings right now on the market. So just piling on and piling up that active listings inventory. And when we look kind of throughout the city, I mean, the numbers don't really change that much. I mean, most neighborhoods in the city, when we look at months of inventory right here, right? Not really much in that balanced range. I mean, you have a couple of neighborhoods here in the East End, right? Around 2 months of inventory, 2.0. So again, that's balanced market territory. We're not really in seller's market there. And then we look at sales to new listings ratio. I mean, a balanced market there is about 50%. We're only seeing a couple of neighborhoods, right? Around that, again, balanced market territory. So everything is showing really that we are in a buyer's market, right? So when we look at the advanced stats here, buyer's market, everything else tells us that. Now, there's some pockets of this inventory that are quite, they stood out to me. If we look at C12, for example, right here, 9.4 months of inventory with only 25% of the listings that are selling. So C12, there's a lot of condos in that pocket of the city. So we're looking kind of the north end of the city. I believe that's like Yonge and Shepherd-ish area. I could be wrong. Let me know in the comments. I don't sell quite often in that neighborhood, so I don't know C12 off the top of my head. But neighborhoods I do frequent a lot and sell in are CO1, which is right in the core downtown, kind of west downtown Toronto at 6.1 months of inventory and only 28.6% as a sales to new listings ratio. That market, anyone knows it, a lot of condos. So it's not surprising that inventory is building up there. Again, watch my last video that really gets into why a lot of these condos aren't selling. And then CO8 is the other neighborhood downtown on the east side of Yonge. 7.1 months of inventory elevated and 25%. So the numbers are the same. And again, that's likely due to a lot of the condo product, right? So the trending statistics are also showing buyer's market. Now let's look at next thing I want to get into now is let's make sure to cut here. Okay, so now let's move on to the breakdown of the different house types. And we're going to look at the composite price numbers because I like to look at the composite because it's a little bit of a more accurate gauge of what pricing is in certain neighborhoods. And it'll give us a better understanding of what's happening in our market, where there are opportunities for buyers, and where current buyers in the market are already seeing opportunities. Okay, so let's look at a few key statistics here. So I have the benchmark pricing up here, and let's look at a couple of these numbers because a couple of them stand out to me right away. And I'm gonna circle a couple right off the bat as we. So let's look at WO2 and WO3 and WO4. So these are some of the under the radar areas that I talk about always on this channel. And while the overall composite benchmark, you're going to be like, okay, well, you have one here, numbers are up 1.28% year over year. That's interesting. Now the other two are down. You're going to say, okay, they're down year over year, just like almost everything else. Right? Pricing is down across the board almost in every neighborhood. And that's when we look at the overall average. Other than WO2, which is like the Junction, High Park, people are seeing some value there. Same thing with WO1, only down 1.81% year over year. When you look again, the rest of the overall average in the city, a lot of stuff is down well over 2, 3, 4%, other than some of these West End neighborhoods. So people are seeing a lot of value here in the West End, but especially in some of the under the radar neighborhoods, and especially a certain type of product. Now, I don't know if you can see it here on the screen. Some of you might have already peeped it out. Let's look at condos in the West End right here. Look at that. So condos in every single other neighborhood in the city is down all 3% or more, right? We're seeing some numbers upwards of 12% down year over year, right? We're seeing 15% down year over year when it comes to condos in certain neighborhoods, except in some of these under the radar neighborhoods, right? We look at WO3 up 3% year over year. WO4, same thing, up almost 3% at 2.76. And why is that? Why are numbers in condos? So the condo market overall across the entire city is in tough shape, except some of these under the radar neighborhoods. And I just had a comment on one of my YouTube videos. People are saying, hey, you're cherry picking certain things. And I'm not necessarily cherry picking. Someone had mentioned, they said, Briar Hill, you're just cherry picking certain things. No, I mean, people are seeing value in some of these neighborhoods, right? And if you've watched this channel, you understand all the reasons why I target these under the radar neighborhoods, right? Numbers are a little bit lower when you look at the overall average in the city, right? So when we look at average price of a condo in WO3, 583, and the average price in WO4, 577 versus the average in Toronto of 600. So clearly the numbers are a little bit lower, but a lot of the condo inventory that currently exists right here, you're not looking at little 400 square foot studio 1-bedroom investor condos. You're looking at, in many cases, family-sized units, right, at these average price points, right? So people are seeing value here. And not only that, any investors that still exist in this market are also seeing value here because rent prices are still fairly stable in this pocket. And because of everything that's happening here from a transit perspective and just growth, this is the Brooklyn of Toronto, like I always say, and people are starting to understand that and they're starting to invest here, right? So when we're seeing these numbers start to move upwards, especially in more affordable price points, right? When we look at what people can actually afford to buy and where they want to be, a lot of people want to be in the city. And these are the neighborhoods where they can afford to enter. Because if you can get a 2-bedroom condo for under $700,000, this is the neighborhood where you're going to get it. And it's not going to be a shoebox. It's going to be a decent size. So right away, really interesting to see that in a market where everything is going down. There's certain spots where people are still seeing value. So I have a couple of notes here. I mean, a couple of other spots. If we look at CO2, when we look CO2 and I don't know why I have notes for CO2. CO2 is not that great. Sorry, it might not be CO2 that I was targeting, but hold on, where are we here? Yeah, anyway, there's no other real neighborhoods that I really want to point out. Almost everything else is down across the board. Oh, sorry, it wasn't CO2, it was WO2 I wanted to point out. There we go, WO2. Detached house prices. So I'm circling it. It's still down, but it's only down 0.5%. Right? When we look at detached house prices everywhere else in the city, right? They're down. I mean, the only other one's CO1, but there's not a lot of detached houses there. But for the most part, 5, 6, in certain cases, double digits, 13% down year over year in terms of pricing. But WO2, not CO2, is actually holding steady. And again, why is that? Why is this happening in some of these under the radar neighborhoods? Well, when we look at W2 and even like semi-detached prices up almost 3% year over year, right? So when we look at the west end of Toronto and all these under the radar areas, people are seeing value here, right? There's so much coming to these neighborhoods and people are starting to understand the value of the west end of the city, right? And people are starting to put their money down. On the flip side, if we look at the other side of the city, EO2, same thing. Family detached house prices up 8% year over year. Semi-detached prices up 3% year over year. So what we're seeing and this is anecdotal from my point of view, is I think we're seeing a reversal from people wanting to move to the suburbs and actually wanting to stay in the city. A lot of offices, people have to return to work. And when we look at WO2 and EO2, these are neighborhoods where you can find detached houses, semi-detached houses at good price points, right? And not only that, it's when we look at, like, let's say a semi-detached house in WO2 average around 1.3. Same thing in EO2. These are the areas where young professionals are starting to move, right? So double incomes, good schools, all the mix is there for the people who still need to buy. So millennials and some of the elder Gen Z that are making decent incomes are choosing to stay in the city and choosing to stay in these neighborhoods, right? That's really all I can deduce from these numbers. We'll have to keep an eye on these two neighborhoods as we move to next month to see if those hold up. But to be honest, I'm seeing the same things, right? When I'm out on showings with clients, looking at the offer presentations and the offers that are happening, we're still seeing bidding wars in these neighborhoods and all that kind of stuff, right? So when we look at the macro stats, we can't necessarily paint everything with the same brush. Yes, for the most part, we can say, hey, we're in a buyer's market, except there's two neighborhoods where we're not. So if you're looking in those neighborhoods, you can't just see a house listed at X price and expect it's going to sell below a certain number. That's just not happening, right, in those areas. However, there are some opportunities in some other spots, right? So when we look at, and again, I invite you to watch my last video to get an understanding of where all the numbers are at. But I like to point this, I want to point this out. If we look at the overall average of a detached house in WO3 and WO4, versus the average price in the city, right? So the average price in the city of a detached house, just around 1.55, let's say 1.56. You're saving over $500,000 in WO3 and $400,000 in WO4. Right, so there's some value there, right? And then again, when we look at semi-detached prices, same thing, right? You're saving a couple $100,000, almost $300,000 when you compare to WO4. So tons of value in these under the radar neighborhoods. Okay, so now with before I move on to the key point of this podcast, I want to talk about one more thing. How are we doing for time? We're at 20 minutes. One thing I always like to point out is the month-over-month stats. Okay, so let's look at the monthly statistics, because while the numbers are down year over year, we are still seeing prices for this year trend upwards, right? So we look at this here from January to now. January we're at $1,041,000. Now we're at 1.1. So for all the doom and gloom, when it comes to sales and inventory, numbers are still trending upwards. Now, there's a little bit of price inelasticity in Toronto, like I mentioned earlier on in the podcast. We're going to have to see if that holds, right? Are sellers going to keep trying to hold on to their price points, right? Because at a certain point, something has to give. Either a flood of buyers enter the market, or the buyers are on the sidelines, start to notice sellers dropping price, and then they come back. So something has to happen first. What are my guesses? My guess is that some of this existing inventory, sellers are going to have to likely drop their prices, and that'll entice some buyers to come back to market potentially. Or there has to be a major rate change or something like that. But yeah, it'll be interesting keeping track of these numbers as we move forward. Okay, so last thing I want to touch on is I decided to go back and look at the historical numbers in Toronto to kind of give ourselves better context of the kind of mess we're in a little bit. So this past April has actually been some of the most inventory we've ever seen in Toronto. And I'll show you right here from these stats. I think it's this one. Yeah. So here's active listings from April of 2015 to now. Right? So if we look at these numbers, right? So when we look at back in 2015, that was a period of time where we actually had quite a bit of listing inventory. I remember that market, things were slow. So we went from just under 8,000 listings, active listings on the market in the city of Toronto. And things have kind of oscillated back and forth. We saw inventory spike in 2021, just crested at 8,000 listing mark. And then again, oscillated for a bit, but then 2023, we started seeing inventory start to pile up, right? And it piled up and piled up and piled up, and it still oscillated back and forth a little bit, but now has really, really jumped past the 10,000 mark for the first time in a decade, right? And to be honest, from what I see in the market, and this is a little anecdotal, a lot of this is condo product, a lot of investor product, right? I talked about this in my last video. One of the issues we have in the city is we haven't been building for end users. So it's not necessarily buyers are being overly picky or they're not trusting the market. They just don't really have the right inventory, right? And if we look here where most of the inventory is situated, this is a map of Toronto that shows all the active listings, right? When we look at some of the hotspots, right? A lot of the hotspots are in the core of the city, right? I mean, we look here, 335 listings near in the like Yonge and Eglinton area. When we look downtown, right? 1,000 listings down on the waterfront, 600 listings on the east side of Yonge Street. The West End, it's a little lower, 252, right? But that's really where the concentration of listings are, right, in the condo neighborhoods. And a lot of that inventory aren't necessarily family-sized homes. Here, let me give you guys a better idea of, again, what I'm talking about, right? So here's the active listings by property type right now. So detached house prices quite high, right? And condo apartments, right? Condos make up well over 50% of all the active inventory in the city of Toronto. Right? Semi-detached, we're probably sitting around 500. Condo townhouses, kind of, again, around the 500 mark. Semis, there's barely anything, right? It's really dominated by condos. Right? Condos are dominating the active listings right now, right? So while we talk about buyer's market, a lot of that is the condo inventory, right? So that's affecting everything in our market right now, and it's becoming this trickle-down thing, right? Because you just see the macro numbers, you say, hey, there's 10,000 listings, but no one really says there's 6,000 to 7,000 of those listings are just condos. And it tricks things with buyers, right? So buyers will say, okay, let me go out into the neighborhood, and I think I can lowball every single seller and get things for 10, 15, 20% under asking. That's when we were looking at numbers. We weren't seeing pricing down 20% year over year. We were only seeing in the worst cases, 14 to 15%. Right? Now, there was an article from TD Bank. I'll see if I can find it. I'll post it here on the screen. They were mentioning they could see the condo market drop by 10%, a further 10% this year. That's a possibility, and I wouldn't rule out that possibility because, when we look at the active inventory, they're looking at the same numbers that I'm looking at, and they see everything else is fairly healthy in the market except for condos. Right? So I don't know what has to change to get all that inventory absorbed. I mean, we could point to a few things. I think extending the foreign buyer ban makes a big difference there, right? Because a lot of the investor product that was being sold and bought in Toronto, especially the smaller product, was being sold to foreign investors or just investors in general. And there just isn't a market for those investors because also rents are starting to come down across the city and across the country. So the numbers don't make sense, especially with these interest rates that we currently have. So I don't know how to solve that problem when it comes to all of the condo glut, condo inventory. But we've got to figure out a solution somehow. And I don't know what that is. So if you have any ideas of how to solve that problem, put it down in the comments. I mean, any comment, I'm open to hearing what you guys think and how to solve that condo inventory problem. And then I think I just want to kind of wrap this up by basically saying there's opportunity in chaos a little bit, or opportunities in this market. You just need to know where to look. I talk about under the radar neighborhoods all the time in this channel. So if you're interested in finding out more about these under the radar neighborhoods, or if you're interested in seeing properties in these under the radar neighborhoods, reach out. I'd be more than happy to have a quick call or even take you out on a tour of what's available in these under the radar neighborhoods. I'd also say right now, with the market being so unpredictable, while this, I have this podcast, I put out some numbers and I talk about what I'm seeing in the market. It's nice having things at the drop of a dime or whenever you need them immediately. So I'd say also head to my website. My affiliate link is down below. Click that and use our Valery AI tools, whether it be to get an idea of what your place is worth. You can get real-time analysis of what your house might be worth, and also real-time analysis in the market, right? So what houses and condos and things might be selling for right up to the moment, right? So the AI tool has access to data in real time, and it can give you really good idea of what to expect if you're a buyer out there or a seller. And then also there's another link in the description down below, down to the website, to reach out if you want to be part of our newsletter, where we kind of aggregate all of the data, all of the content I've made into a newsletter where you can get it month to month. So if you miss out on something, it's in the newsletter, or just subscribe to this channel. All the content I put out ends up on YouTube first, right? So either subscribe to the newsletter or hit up that subscribe button, like this video, And that's about it. That's it for this update for May of 2025. There's a lot more to talk about, and I'm going to be making some more content and more pieces about this. But I really, before screaming and worrying about where the market's at, I really want to see what happens this month in May, right? Because that I think will dictate where things head for the rest of the year. Because typically May and June are some of the busier months in Toronto real estate. So I'm actually more interested to see this month's report next month. And then we'll have a better read of the situation. But yeah, until that, use a Valery AI tool, subscribe, keep watching this channel for more info. And yeah, that's it for this week. Thanks a lot for watching. Peace out.